All right, so I feel bad, y'all. I really do. I feel bad because Google is having an excellent day. It's crazy. It's up like 100 points. And I've been holding out on you guys, man. I've been in a trade. If you follow my channel, I always say, yo, I'm heavy in Google. I'm heavy in Google. And it's been paying off, man. I just been kind of quiet about it today. It's a beautiful, great earnings, right? That's why it's up big. Nice gap. And it's holding. It's up 100 and something points. And I just want to share with you the trade that I have on, how much money it's made, and how much money it's going to make. And then we could look at the chart, and then we could see maybe what kind of trade you could put on for the future that will kind of simulate the trade that I have had on all this time. So let's go ahead and let's look at the trade. All right, so here's a quick screenshot of my Tastyworks account, right? So I trade Tastyworks as well. I got a few positions in here, and you can see I got my Googl trade. I have a call spread on, and it's the 1940-2450 spread. Okay, that is a, let's see, 450. That is a 510 point wide spread. And right here, you can see how it expires June 17th. That's 415 days from now. That's not this June, that's next June. Okay, so it's still over a year, because remember, I buy leaps. I only buy leaps. I don't have to worry about volatility. It's as long as you got time, the trade is gonna work. Look at the delta on this trade. The delta is 26, right? 0.26. So that's like equivalent to me having 26 shares of Googl. So if Google's trading at, right now it's 2381, and I would times that by 26, the position is kind of simulating $61,906. That's what the position is kind of trading like. All right, so let's go ahead and get to the action over here. And you can see for the day, I'm up $2,222. It's been up, it's been down, and right now when I'm doing this video, it's trading at 2,381, right? And you can see for the whole position, I'm up $21,874 on this position. Now, if you look at the trade price, that's right here. This is the option I bought, okay? I spent $24,411 on the long option, and I sold the 2450 against it for 16,370. So if you do the math on that, I said 24,411 minus 16,370 equals 8,041. So the trade cost me $8,000, $8,071, and I'm already up $22,000 on the trade. So I'll take it. So this is what I mean by just going long, put a spread on, relax, chill. You got plenty of time, and you're going to make money for the most part. Let's see what kind of trade you could put on like this in the future if you're interested in like trading Googl to making a trade like this, because it was a fantastic trade. And by the way, we got some more math to do. Let me take you to the screen. Let's analyze what I really got going on here. All right, so I'm up $21,874 for the screen. Now remember, this is a 510 point wide spread. So that's a $51,000 spread. All right, I paid $8,000 for the spread. I'm rounding it off. So if this thing is above $2,450 before June 17th, which is only, for the most part, 60, 70 points away, this spread, I'm going to be up total $43,000. All right, so right now I'm up $21,000. So I have another $23,000 to go, as long as this thing can stay above 2450 in the next 13 months. So that's the kind of trade I like. This trade cost me $8,000, and I'm telling you, man, I'm taking that whole thing. I'm taking all of it, and I'm gonna be up. This trade's gonna be worth $43,000 before I close it out, unless I get nervous. So let's go ahead and look at the chart. Let's see if what we can see, and then I'll show you some kind of trades that you could put on to simulate this trade that I've done out in the future. So let's go ahead and do that. All right, so here is the chart of Google, and you can see how it's just totally riding on that trend line. This is the month, this is the weekly, excuse me. So this is the weekly, and you could see how it's finally elevating, taken away from that, just taken off, right? To the moon. It's just kind of departing from that trend line. Let's actually bring up the monthly and get a better look at it, and you can see how it's going straight up. Now, we know Google ain't just going to continue to go straight up, but in this market, who knows? Who knows what this is going to do? But I'm going to say it's toppy, and I think we should probably wait for a pullback to some sort before we put on the next trade or a trade like I got. Maybe somewhere around, yeah, I'll tell you what, let's pull up the daily, because look at this right here. You see this area right here? I'm going to draw a square around it. This is a gap that never filled. I mean, Google was just trading like a boss. I mean, it gapped up and it just held it, right? Will we do the same thing here? Will it just hold it and kind of continue to go up? Even down here, right here, we gapped and it just held. It did not fill that gap. Even here, it gapped and it did not fill the gap. So Google, wow. I mean, you're not filling the gaps. This thing is just to the moon. Well, anyway, maybe we can get a gap fill, and that could be the pullback. Maybe we can pull back to 2,000 even. I know it sounds crazy, then the market maybe will have some kind of serious correction if it were to do that. But if it were to do that, that's the point to put on the next trade. So just kind of wait for some kind of pullback back into the action. And if you look at the weekly, you can see Google always gives you a chance. It's always pulling back. It never really has a run like this. Last time I seen a run similar, it's like way back when Google was a new stock and this thing was up like 50 points every day and whatnot. So that's the chart. So let's go ahead and look at let's pull up the option chain. Okay, so let's pull up the option chain. I'm going to use Tastyworks here, and this way you could see the option chain pretty good on Tastyworks. So we use Tastyworks. Right now it's trading at 23.85, and I'll pull up all the options, right? Starting at April 30th all the way to June 16th. Now, I like this because you could go 779 days out, right? Not this June, not next June, but the next June, right? And that's the time that I like when I put on my trades. That's actually a long time. I may even consider like this Jan 20 or something like that. But hey, there's nothing wrong with that. So we're going to play with these options that expire June 16, 2023. And the trades that I like to do are real simple when I want to do a call spread. All right. A lot of times I sell credit spreads, but on something like this, the stock's running. Google just killed it. YouTube is blowing up. We could probably put on a call spread on this one, and because we know this thing will be higher in the next 2 years, right? We know that. We just don't know how high this stock can go. So what I like to do is just to go right here at the money and just click buy, right? And that's a $40,000 position. Okay. And then I'd like to go all the way to the bottom, the last one available, and I sell it. All right. So you see I'm buying the 2,400 strike. I'm selling the 3,400 strike. And that's going to cost me $28,000, $165. Now, I know many people don't have that kind of money, and I'm not saying I got it. But this is where I will start to adjust it, right? I'm going to adjust it to what I can afford. So what I do is two things, right? I'll either take the bottom strike and I'll get more credit for it. I'll just slide it up. Maybe I'll go to the 3,000, right? So now that's $20,000, this spread, the 2,400 to 3,000. Well, it might still be kind of pricey because remember my trade was just $8,000. So how about I slide it way up to here to 2,600. There we go. 2,400 and sell the 2,600. That's a 200 point wide strike, and that's going to cost me $8,250. Let's call it. So a 200 point wide strike is $20,000. Remember, in options, everything is times 100, and if it costs me $8,240, the most I can make is $11,760 if it were trading above $2,600 in the next 2 years, right? So the chances of that is like to me, it's like 100%. All right, nothing is given, 99%. But I mean, Google's a juggernaut. 2.5 years from now, can this thing be up another 200 points? I mean, I think so. I mean, shoot, it was up 100 points today alone. Here's the thing. You just need time. You need time. You need to be patient. So we're going to take $8,000 and we're going to make 11,000. We're almost going to double it, like 1.5 times our money on that in 2 years. That's a good trade, right? You just got to be patient, man. Just set that trade and forget about it. Just forget about it. And this is why I didn't even kind of put it out in the videos like that, because I kind of forgot about it. I forget that I had such a wide spread on, and that's how I like to trade. Now, you can also do something like this. All right, so I was originally down here, right, selling that last strike. I bought the at the money and I sold the very last strike possible. It was $28,000. Too much money. So how about instead of moving that short strike up, we move the buy strike down? Maybe we come way down here and we buy the 3,000 and sell the 3,400. Now, the thing about putting on that trade is, suppose Googl never reaches 3,000 in 2 years, right? If that were to happen, you're going to lose all of this money. The trade is $8,035. You would lose it all. And you really have to be confident in the stock that you're trading to do that. So that's why I like trading at the money, because it just makes me feel a little bit more comfortable. I mean, it goes up a couple points and it's already trading in the money, right? So you don't need it to go up. You just need to go up 80 points for the most part. And then for the most part, and I'm profitable, right? I'll be profitable. So that's how I like to trade. That's it, man. I'm really dropping the secret sauce. Call spreads at the money and selling put spreads at the money a year or more out, and relax and be patient, and you can make a lot of money and you're not even day trading, right? So anyway, like I'm up 2,000 today, and I don't even remember when I put this position on, but it was a while ago. So I hope this video kind of helps and you understand the way I trade, the way that you can trade and put on trades that just patient, that just you can relax on and you don't have to worry about. If Googl would have dropped 200 points, 300, who cares? Who cares? Now, the position will be down, but I got 2.5 years for it to recover, so I'm not necessarily worried about it. Right? To me, it's like a synthetic long position. And there's other things you can do that I kind of do when I'm getting way out here. I'll buy a call spread and maybe sell a put spread against it to lower my costs. A lot of different things, but I'm making it simple with this. For the most part, you could just go way out with these expensive call options. And the reason why you want to do a credit spread is to lower that strike, right? We can't buy no $50,000 call. So we'll sell something further out and kind of bring it in and just adjust it to the size of position that you want to put on. And hey, just let it ride and watch the profits, man. Watch the profits and do it on you can't do this trade on stocks. Well, you can, but you don't really want to do it on speculation kind of stocks. You want to be guaranteed these stocks go up. You know what stocks are those? Apple, Microsoft, Google. For the most part, the FANGs. I can't even say Facebook with its corporate, with its government, lawsuits. You know what's going on with Facebook. I can't even say something like that. Visa, Starbucks, stocks like that where they're going to be higher in a couple of years. All right, let me know if you have any questions. I hope I explained this well. I know this is a pre-recorded video, but I'm recording it live and then I just kind of upload it, right? So it feels live, no script here. I'm just trying to go and explain what I got going on, and I hope it helps. So if you have any questions, just hit me up on Twitter, right? Instagram, Twitter, Instagram, Dre Trades. Hey, how about right here in the comments, Dre Trades? Well, you don't have to. Nah, just in the comments, just go in there and say, hey man, what about this? What about that? And I'll try to help you out. All right, so thanks for watching, man. Stay tuned to the channel, subscribe, like, right? And I hope you're doing good. Hey, Apple earnings today, after the bell. I might have to do a video on that. I'll talk to you later. Dre Trades, I'm out. Peace.